In the previous section, we examined how credits, debits, and prorations appear on a closing statement, ensuring that financial responsibilities are distributed fairly between the buyer and seller. Those principles set the stage for this final section, which focuses on two specific and universally present elements in every Arizona closing: property taxes and recordation fees. These charges are not just routine costs. They reflect the legal transfer of ownership, compliance with Arizona statutes, and the proper accounting practices that bring a transaction to its lawful conclusion. At the close of escrow, the escrow officer acts as the neutral intermediary, responsible for ensuring that all fees, taxes, and financial obligations are properly collected, prorated, and paid. Among the most important of these are property taxes, which must be settled so that no unpaid taxes encumber the property after transfer, and recordation fees, which ensure that the new deed and related documents are officially entered into public record with the county recorder's office. Licensees must understand how these charges are handled, how they appear on the closing statement, and what their inclusion signifies in the broader context of Arizona real estate law. Property taxes at closing. In Arizona, property taxes are paid in arrears, meaning that taxes assessed for the current year are typically paid in the following year. Because of this, when a property changes hands mid-year, the escrow officer must prorate property taxes to reflect the time each party owns the property. Following Arizona convention, the day of closing belongs to the buyer, so the seller is responsible for taxes up to, but not including, the date of recordation. This standard ensures consistency and fairness across all transactions. For example, if annual property taxes are $3,600 and the sale closes on September 30th, the seller would owe 9 months' worth of taxes, $20,700, and the buyer would assume responsibility for the remaining 3 months, $900. The seller's portion would appear as a debit on the seller's closing statement and as a credit on the buyer's statement. If the seller has already prepaid property taxes, the buyer must reimburse the seller for the unused portion, and that amount will be reflected as a debit to the buyer. Property tax prorations are more than simple bookkeeping. They are also legal requirements. Escrow officers rely on verified tax records from the county treasurer's office to ensure accuracy. If a tax bill is due but unpaid, escrow will collect funds from the seller at closing to pay it immediately, preventing a tax lien from attaching to the property. Arizona law under ARS, paragraph 42-17153, allows counties to place liens for unpaid taxes, which automatically attach to real property and follow it even after transfer. By confirming that taxes are current at closing, escrow officers protect both the buyer and the lender from inheriting tax liabilities. In some cases, especially when closing occurs near a tax payment deadline, escrow may hold back funds from the seller's proceeds to ensure that the bill is paid when due. Once payment is confirmed, the remaining funds are released. For licensees, understanding this process is vital because clients often question why additional funds are being withheld at closing. The agent's role is to explain that this safeguard ensures compliance with state law and guarantees clear title transfer. Recordation fees at closing. Once all financial obligations, including property taxes, have been settled, the final step in the escrow process is recordation, the official filing of the deed and related documents with the county recorder's office. Recordation gives constructive notice to the public that ownership has changed and that the buyer now holds legal title. Without recordation, the transfer is not recognized in public records, leaving ownership rights vulnerable to dispute. Recordation fees are typically paid by the buyer, though this can be negotiated in the purchase contract. These fees cover the cost of recording the warranty deed, deed of trust, affidavit of property value, and any other required instruments. The amount varies by county, but generally ranges from $30 to $60 per document. These charges appear on the buyer's closing statement as debits, The Arizona Association of Realtors (AR) residential resale real estate purchase contract specifies that the buyer usually pays for recordation and title insurance for the lender, while the seller pays for the owner's policy, unless otherwise agreed. Once the deed is recorded, escrow notifies all parties that the transaction has closed. Ownership transfers immediately upon recordation. Funds are dispersed, and possession may be delivered according to the terms of the contract. Arizona courts have consistently upheld that recordation marks the legal completion of the sale, as illustrated in Watson Construction Co. v. Omfac Mortgage Corp. Ayres 1981, where the court confirmed that title passes upon recording, not upon signing or funding. This reinforces why recordation fees, though modest in cost, represent one of the most critical steps in the entire transaction. For licensees, understanding both the financial and legal importance of these items is essential. Buyers and sellers may view property taxes and recordation fees as minor details, but mishandling either can delay closing or cloud title. A professional agent explains these fees clearly, verifies their accuracy on the settlement statement, and ensures that clients understand how they contribute to the successful transfer of ownership. Discussion: why must property taxes be prorated at closing in Arizona? Answer: because property taxes are paid in arrears, and prorations ensure that both buyer and seller pay their fair share based on the period of ownership, preventing unpaid taxes from carrying over after closing. What is the purpose of recordation at closing? Answer: recordation gives public notice of the property's ownership transfer, ensuring the buyer's title is legally recognized and enforceable under Arizona law. Who typically pays the recordation fees at closing? Answer: the buyer usually pays the recordation fees, although this can be negotiated in the contract. Review summary. Property taxes and recordation fees are two essential components of closing that reflect both financial accuracy and legal finality. Property taxes in Arizona are paid in arrears, making prorations necessary to ensure each party pays only for the portion of the year they own the property. Escrow officers collect or credit these amounts to guarantee no unpaid taxes remain. Recordation fees, while relatively small, complete the transfer of ownership by providing public notice through the county recorder's office. Ownership officially changes upon recordation, marking the legal completion of the transaction. Licensees must understand and explain these costs, verify their inclusion on the settlement statement, and ensure clients are informed and protected. By doing so, agents uphold Arizona's principles of fair dealing, transparency, and lawful transfer of property rights.